Nvidia delivered another solid quarter of results Wednesday, but investors are making it clear the results not good enough. The stock down nearly 8% in today's trade. And joining me now is Ross Gerber, Kawasaki Wealth Investment Management CEO, and Yahoo Finance's very own Julie Hyman. Welcome to you both. Ross, let's talk about Nvidia, because it was interesting, Ross. Today you kind of combing through the analyst reports, the analysts who are paid to give you a recommendation on what to do with Nvidia. I would say, Ross, they were broadly positive. Analysts were saying, listen, the reports were solid, demand is strong, the guidance was fine, but investors, took this one down about 8% in today's trade. I'm curious, Ross, what you made of the report and the reaction.
Well, the report was exactly what we had expected, and great numbers by any stretch of anybody's imagination. So really what it comes down to is the market itself is going through sort of a revaluation process because of the Trump administration policies that create a lot of uncertainty with trade. And Nvidia is kind of caught up a little bit in that in several areas with China and then the manufacturing of chips outside the United States. But really, Nvidia is kind of a great value if you want to invest in AI and you look at what their earnings estimates are for the next 4 quarters, and then you're looking at a PE now of 25 forward PE, so maybe 30. So this is a great opportunity for investors who see the long term.
Well, and Ross, it's Julie here. It's good to see you. I think one of the questions around Nvidia was not whether it could keep on delivering, but it's like, do you see a sort of a law of diminishing returns where it's so large and it's still growing by enormous double digits, right? Which for any company its size would be unusual. But even your point taken about what the PE is, but at what point then does it sort of get priced into the stock and all of these expectations for that growth?
Well, besides its incredible numbers that, are pretty, unique in corporate American business history in their growth over the last several years, but if you really just look at a chart of revenue growth or earnings growth, this thing is just a monster and it continues to go. But, as companies get bigger, their PE ratios in theory should compress a little bit as they get harder to grow. Now, it wasn't that long ago people were saying the same thing. Oh, a company is not going to be $1 trillion once it gets to be $1 trillion. How could it get bigger? And now it's $3 trillion. How could it get bigger? Well, how do you make $22 billion in 3 months? That's incredible. And so it's really about how they deploy their capital that's important. Management is really focused. They're delivering, and we're just at the beginning of the AI revolution. So I think for us, we're long-term investors in Nvidia. I've owned it for a decade. We're not selling it. I would look for every opportunity to buy this stock. We're already overweight it. So, and it's our largest position at my firm. But, if you're an investor and you believe in this stuff, you look for these opportunities. Now, I do think the correction has some more room to go just in the markets themselves. So, I'm cautious in adding technology at the moment, but it's mostly just because I think the market has begun a correction.
Is there a level you'd be watching, Ross, on Nvidia where you'd be like, okay, that is the opportunity I'm waiting for to move in?
Well, it's kind of there now. I like this level right here. As I said, I don't have a lot of confidence in the markets working higher right now because of the policies that are being thrown at the world by the Trump administration. And so when you have such regressive economic policies being batted around, you sort of have to ask, do I want to add risk here? And that's what we're seeing in Bitcoin, and we're seeing it in Nvidia and all the high beta names is people are risk off. And a lot of money is rotated into Europe and China, and that's what we've been doing at our firm, adding gold, diversifying more, getting more conservative, because if you look at the market multiple and what's happening, as I said, I think the market could work itself, 5 to 10% lower from here, and that would be healthy, and that would be a time when I would be a buyer.
Ross, we have to talk about Tesla since you're here. I feel like we're obligated. I feel like we've talked to you in the past that you have Teslas, right? Maybe you were going to buy a different car. Are you one of the people putting the bumper sticker on the back of your Tesla that says, no, I bought this before, blah, blah, blah?
No, and the people who say I bought this before Elon went crazy, Elon was always crazy. So that is kind of a weird bumper sticker. I think for me, it's reconciling the fact that I care about climate. I think they make great EVs. I want people to buy, whether it be Teslas or any EVs. I drive a Cybertruck right now. And the part that's painful is just, people hate Elon so much that you just feel the unhappiness that on the vehicles, and a lot of people are sort of just driving them in shame because we care more about the environment than trying to pretend
Ross,
like.
pardon me, but you got a lot of choices from EVs right now. You don't have nobody's making you buy a Cybertruck.
That's right. And the truth is that Tesla still makes the best EVs by a wide margin. So, you're right. And I would get rid of the Cybertruck and maybe buy something else. But I bought the Rivian too. I have a Rivian and I love the Rivian as well. So I wasn't really going to buy another Rivian. But, right now in my life, actually, this is the first interview from my house that I've been able to do since the Palisades fire. So I'm very, very happy. And the Cybertruck was just like an incredible vehicle to have during, the apocalypse that I just went through for the last 2 months. So, I'm a little bit grateful to the Cybertruck, to be honest.
Why, Ross? Why do you say that?
Because the vehicle works incredibly well for what it's supposed to do. And, for an electric truck, and the way, not only the speed, but the reliability and the strength of it. I've had to drive through mud. I've had to drive over trees. I've had to drive through fires, floods. I mean, I'm in like the third level of the apocalypse right now. As I said, this is the first day I've been able to even be at my house. I'm hoping to move back, this weekend after 2 months of living in a hotel. So when crap goes down, Tesla products work. The Starlink is a lifesaver. I'm putting power walls in my house as soon as possible. So it's almost like Tesla was built for, climate change. And that's why I love Tesla. I think Tesla's a great company. I think it needs new leadership.
First of all, we're glad you're okay, Ross, by the way, and we're glad you're back in your house. I know it's been a tough time out there in LA. What about as a shareholder, though? So you're talking as a customer, obviously, and you're also talking as a shareholder, as someone who wants to see that leadership change at Tesla. We haven't really had the chance to catch up since this whole Doge thing has heated up. And there's really has been this wave of sentiment against Elon Musk that seems to be hurting the sales of the company as well. What do you think happens next? What should happen next?
Well, one thing I'm sure of is that politics and selling products just doesn't mix, And so, the dislike to Elon's approach to, everybody thinks the government should slim down, but the approach is really the problem. And it's really affecting a lot of people, and it's creating a lot of animosity towards Elon, and therefore people sort of extrapolate that out onto Tesla. And it's, once again, it's super unfortunate that such a wonderful company with a great brand, which I've been saying for now years, was on the verge of being severely damaged if this path was continuing to go. And now that's happening, and now we're seeing it in sales. And I think this quarter is going to be not a good quarter for Tesla. And fortunately, they're launching a new Model Y, which might help them next quarter. But the truth is, people identify with their vehicles, and people don't want to identify with Elon Musk. And unfortunately, they take that on Tesla. And, it's unfortunate. So we've taken the opportunity with higher stock prices to continue to lower our position in Tesla. We still own a lot of Tesla. So, I can't say being down 30% on Tesla, I'm happy about, that hurts our shareholders. And, in my fund, we lowered the allocation, a lot to almost nothing. But in real life, we still own, probably around 250,000 shares of Tesla. So it's been a tough year for Tesla shareholders, and I don't see it getting better because it's still trading at over 100 times earnings.